A 100 exam, 2 questions, and answers with complete solutions, 100% correct, rated A+. Question: who are considered equity investors in a business? AOE, individuals or entities that contribute capital in exchange for ownership shares, e.g., stockholders. They may also benefit from profits retained in the business, called retained earnings. Question: who are considered debt investors in a business? Heavy checkmark creditors such as banks, bondholders, or leasing companies. Their loans are recorded as current or long-term liabilities, and both the principal and interest must be repaid. Question: what legal rights do equity investors typically have? AOE. They receive shares representing ownership in the company and have the right to benefit from profits if the company performs well. Question: what are some of the risks equity investors face? AOE. They may not receive expected returns, and there's a chance they could lose part or all of their investment if the business fails. Question: what benefits might equity investors gain? AOE. Potential increases in the value of their shares and the possibility of receiving dividend payments if declared by the board. Question: what legal obligations does a comp in New York have toward debt investors? AOE. The business must repay the loan principal along with interest. Creditors can take legal action if payments are not made. 1/2. Question: what risks do debt investors assume when lending to a business seen as S? Heavy checkmark. If the company struggles financially, it may miss payments or need to sell assets, potentially leading to bankruptcy. Question: what is the potential benefit for a business when using borrowed funds? Debt. OE. If the company earns a return higher than the cost of borrowing, the owners retain the profit after loan repayment. Businesses can be divided into these categories. Answer: heavy checkmark financing, investing, operating, Securities and Exchange Commission, SEC. Answer: heavy checkmark established in 1934. Only applies to public companies. Requires public companies to file the following: Form 10-K annually, Form 10-Q quarterly, annual financial statements audited by an independent auditor. Generally accepted accounting principles, GAAP. Answer: heavy checkmark. The accounting standards that companies based in the United States are required to use. Standards give the statements credibility and allow reports of different companies to be comparable. The responsibility of the Financial Accounting Standards Board, FASB. Financial statements. Answer: AOE. The financial picture of the company. Notes to the financial statements. Powered by TCPDF, www.tcpdf.org. 2/2.